presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Hi, everyone. Basil Chapman sitting in for Steve Rhodes. Steve had to leave a little early, so I said I'd be free to do his show. And so I'm usually at 11 o'clock till noon. That is the daily show that I do. The most important aspect about the show is that it's every single market day and Monday through Friday, 11 o'clock till noon. And most importantly, whenever I can, I try to fill in for whoever is there. I'm pinch hitter. I'm always studying the market, looking at the market, looking for the types of trades that would be beneficial to my subscribers. And my daily service is called the Opening Call. And I know Steve is giving 2 workshops coming up. I'm also giving 2 workshops coming up. Check the front page of TFNN. It's going to be very significant because let me just get it right here while I'm talking about it. Right there. So you've got a 2-part webinar by Steve Rhodes. He's going to be talking about the psychology of planning your trades, how you implement them, how you've got to think. Most importantly about the aspect of webinars is that we try to impart to you subscribers. This is open just to subscribers. We try to impart the knowledge that we've garnered over all the years through our mistakes, through the good aspects, etc. And mine is going to be right here to join Basil Chapman for these 2 educational and entertaining trading webinars. The 28th will be the essentials of the Chapman wave. What we look for, just those 3 patterns. One is either the cup or the V-shaped pattern, or the inverted V-shaped pattern, or the you can call it an arch formation or a straight line. So you've got either up and down, or down and up, or a straight line. And once you understand that those are the key ingredients, it makes it a lot easier to be able to decipher what's going on in the market. The other thing also in the Chapman wave, and most importantly in the Chapman wave, is that there's a very simple, no, it's not this particular thing. Let me find it right here. It is right there. It is a simple technique of finding the lowest, most identifiable low, and then merely counting each successively higher peak on the way up. And what we look for are 4 successively alphabetical letters, A, B, C, and D. When you get to peak D, other things can happen. And look how interesting it is. We've gone to a peak D in the Dow at in the E-minis at 2105.25. Now we're starting to pull back. If you look at the Dow, INDU, you've gone to a peak. Oops, wrong, right there. INDU. You've gone to a peak C, but it's within the context of having made a peak D or E, in this case a peak E, right there at 18,288, and that was back at the 23rd, was it? No, the 2nd of March, 2nd or 3rd of March, right at that top. That was the all-time high. Now we're consolidating, but these C's can fail. If they fail and become a C minus, it's very negative. But you've got a D already in the weekly chart. Look at this. This is the S&P, SPX.X. You've gone to a D, second D, and you're pulling back from the 2,111.91 high of the 15th of April. These are significant. Even the 120-minute chart has gone to a D. So I'm going to be discussing these particular patterns on the first webinar week from last night. It's Tuesday the 28th, 5:30 to 6:15. And even more important, we've got another one a week later, and that's following up on my discussion about the matching socioeconomic and political environment that we're in right now that matches very well the 1920s, the late 1920s, going to the 1929 top. Where are we? I'd say we're probably in that late 1928 period. It's my thinking anyway. But does it mean that we're going to go into a depression? No. It just means that you've got to start looking at the sectors, and you've got to start looking at the weak stocks, and how just a few of the strong stocks have been moving the market higher over the past couple of weeks. And that, in fact, we've been in a consolidation since that March the 3rd high in the Dow, and it was in late April in the S&P. And in fact, the webinar that I gave regarding the 1929 match had, in fact, gone very much into the details of what I was expecting as a consolidation. And if it was a rotational consolidation, maybe we don't go down to the double-digit decline, because it's ameliorated by the few strong stocks holding up those indices. But in fact, there is a rotational correction with some sectors like utilities, transportation index, and others already pulling back very sharply. And just a handful of the biotechs are pushing the biotech toward an all-time high. It hasn't made it. We'll see if it's going to be able to hold right here. So my bias from my subscribers to my opening call is more towards the negative side right now, and we're trying to add to it today. So let's go right through the numbers. You've got the Dow down 38 at 17,911. I'll do it with the I'll do it together with INDU. So here's the Dow. Failing, when I did Tom's show last night between 3 and 5, the Tom O'Brien show, I was showing that this inside track, Chapman wave inside track repellent zone, has been working, because only once has the price gone above, and it couldn't hold after that. And that zone up to about 18,000, between 17,950 and 18,000, that's very strong resistance. And once again, the price is being repelled under the black line, which is the 9-period exponential moving average. And look, the up track support level in the weekly chart is going to be tested over the next few days if the Dow breaks under 17,800. Which looks like it could certainly do that. Here's another thing. So the upside is limited to the 17,990s right now, and the downside is not really limited. SPX.X, you've got the S&P at peak D is pulling back. The MACD didn't go even close to where it was in the previous highs. Stochastic is pulling back under 80% to 72%. You've got a peak C1, C2, and a potential right here of a peak C3. I'm even going to type it in here to show how important these Chapman wave notations are. And this in the 120-minute chart already made a peak D. I can put a down arrow because the technicals are failing. Very important moment we're in right as we speak. Now let's go on. Let's go to the IWM. The IWM has been one of the leaders, but it's failing now. Went to a peak G/C. It's probably going to be a G in the daily. But the weekly, if this is a peak F rather than an alternate count F/B, wow. You got to be real careful, because it's trading at 124.61, down 91 right now. But if the IWM breaks under 123 support, that'll be the first time if it closes under that this Friday, that'll be the first time it's closed under it since it broke out above it the week of the 6th of February. And it's gone from the 118, 119 area all the way to the 126, what was that, 127 something? Yeah, 127.13 high of just last week, 127.30. All right. Well, let's go on. The QQQ series. QQQ series has made a peak C, a leg C, but it's within this inside track repellent zone. And let's see if it's going to hold or fail. It's at 107.75, down 31 cents. If it takes out 107, no, if it closes under 106.90, that'll be a significant break of the pattern. And say, be careful. Once again, you're making an arch formation, and you can start to pull back. What it really needs is 108.70 to show that it's got internal strength. Let's go on, and we're going to go to the New York Stock Exchange, NYA.X. That's how I get it. Made a peak E with a doji candle, pulls back. Now it's making an arch formation. That arch formation says, be careful, because at 11,072, if it cannot get back into the 11,170s within the next 2 days, this pattern's going to make the pattern I call the lowercase h formation. And that H formation says, be careful, because the Roman candles, a particular Chapman wave technique of the 17th of April, if you get into, if the NYA, not you, but if the NYA gets into 11,040, the New York Stock Exchange, very broad index, there's a real good chance it's going to pull back even deeper. You've got to be real careful here. All right, let's go on, and we're going to look at gold. Gold at this particular point is down. Wow, down 13 at 11.89. There's that H pattern once again. We've been expecting that, and it's kind of coming about. This is an A. Let me show you something about the Chapman wave methodology. You can take any. It's a fractal, so you can take any pattern, any time frame, and within that time frame, you should be able to get at least to a peak D before you get a significant pullback if there's a buy signal to buy mode. Well, lo and behold, it went right to the gold contract itself went to peak D, and then there was a rogue wave, another one, A. Is that a B? No, that's a gray B, and that's an E. All right, and then a rogue wave to an E, and then it plunges lower. All right, we'll be back. We're talking about these bonds are down 11 ticks. No, down 1.10. I'll be back. We'll talk about that in a moment.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. This is Basil Chapman sitting in for Steve Rhodes. And, of course, this is the Trader's Edge. My show comes in, the Tiger Technicians Hour, at 11 o'clock and straight after this show. So it's my pleasure to be sitting in and doing 2 hours today. So I had a couple of questions I was looking at before the break. I was looking at gold. So gold has been pulling back. It hasn't gone anywhere. It's making that arch formation. The dollar's a little bit weak today. In fact, let me just move this over so I can see. You've got the dollar up about 0.03 at 98.24. No big deal. It's but it's holding well. But I had a couple of questions, and one of them is, let's see. Manjeet asks, says, didn't see the overview chart posted today. Will there be one? I can't believe I spent so much time last night on the overview and then I didn't post it. Anyway, I have posted it. I posted it as soon as I got your email. I've posted it every day. You get the overview chart. Let me show it right here. I think I've still got it right there. Nope, this is the overview right here. I took it off. All right, I don't have it on there. I took the overview off, and every day I give a very detailed, comprehensive look at. It's an overview plus what I'm expecting today, and it's based on this chart right here, which has 5 quintiles. It has the Dow right here, 120-minute chart, made a peak B, which is failing right there. Let me just put that in, big B. And the VIX index, which is finally showing a little bit, it's in leg B. Once again, it's trying to rally. Right here is the short-term trading index. This is the daily Dow, made a possible peak C1, C2 top there. And this is the S&P daily with a peak D. And then I give quite a lengthy report on what we're looking at and which sectors are working, etc., as well as anything that I notice that is unusual. But most importantly, let me just go back. And the question was, so he says, all right. Also, I think many subscribers, including myself, would benefit greatly if you could move toward publishing a daily chart update of the Qs. That's the QQQ series. That's the PowerShares QQQ Trust series. You do so for the Dow and the ESM. That's the E-minis. I always show this chart right here, which I did when I opened the show. Shows the E-minis, whatever month is current, and I show the daily and the 120-minute chart. I give an analysis. There's no trade. Very seldom do I ever give a trade on that. But I also have been showing the weekly charts for a while because I wanted to show how the weekly is going to be so important in this particular phase. So, to add the QQQ series, I do so much. I spend so much time. I do, in any case, do the QQQs, but I also then have to write up a report. I'll try to add it. I think it was asked of me about a year ago, and I think I try to do it. I'll do it maybe every other day if I remember to do it every day. I'll try to do it. I know I'd love to do it, but how many charts can I work on in detail? That is. So anyway, let me show the QQQs again. You see this little lopsided declining trend line, what I call the inside track. You see this cup formation. You see how it's failing each time at a lower high. That's really significant. Now, I don't think that this market is ready just to suddenly turn around and collapse. Not exactly at this point. There's just enough. I have an expression, it's called the rogue wave. And it says that when you go to the beach and you see high tide at noon, sometimes a few minutes after the so-called high tide event should have completed, you'll get one or two waves that splash all the way up the shoreline, get everybody soaked, and as you're wiping your sunglasses to see what the heck happened, the tide's out already. In fact, it was just that one wave that didn't see the sign that said high tide at noon at 12:05. It ran a little too high, and that's exactly what happens in as tops are made. You get these flurries of activity in the final bunch of sectors or stocks that have internal strength, and they have to wear that strength out. And that's what you're seeing in the IBB, which had a big spike early this morning and went to, it could be a leg C and a failure pattern, but the stochastic is still very good and the MACD is still good. I'm suspicious of this. I think that there'll be at least another wash up the shore to really flush out all the bears. And believe me, we've been trying to short this with some success and some lack of success. But I believe when we get this, it's going to be a doozy, because this IWM, let me show you something that I showed my subscribers this morning as we go out. I'll show you this chart right here. Right. If I can find it. If I have. Yeah, right here, and I'll move it over. Okay. I'll be back. This is Basil Chapman sitting in for Steve Rhodes. This is the Trader's Edge. I'll be right back. Dow's down 21, S&P's down at $1.90. This is a fascinating chart. I'll discuss it when we.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman sitting in for Steve Rhodes, and this is the Trader's Edge. So this is the chart that I was showing just before we went to the break. You don't have to know what it is. Maybe you can't even see it from there. Let me just check when I get the Tiger TV right up. There's a little bit of a delay. And yeah, look at this. If you use it, just a visual scan, you could say that this move up here is very sharp. It is probably about 48 degrees. I'm just guessing. Oh, I should have taken the break and used my protractor, whatever, to have a look. All right. But this is getting close to the 80 degrees or higher. And these are not daily charts. These are monthly charts. These are not weekly charts. These are monthly charts. Monthly charts to go this vertical is really something. And what could it be? Well, this is the S&P, and you can see this basically. Let me show you from here to here, a little pullback, and here to here is almost like a one-to-one extension. Look how many extensions there are. This is let's call this Fibonacci wave 1, not Fibonacci, but Elliott wave 1, 2, 3, 4. This very well could be Fibonacci 5, wave 5 in the monthly chart. Well, I'll tell you what it is. This is an index on the biotechs, one that's hardly ever spoken about, but it's a very important one. And it shows the parabolic, the start of a parabolic move over there, a vertical move. You haven't yet got that. This is the S&P, and this is the BTK, New York Stock Exchange ARCA Biotechnology Index. And it's in leg E/A. I don't think it's in A. I think it's in more like leg E, which means it could still go to an F, but at this particular point, it is certainly due. Look at that. It's like a one-to-one over there just by itself. Could go a tad higher for a one-to-one. But it is extended, and should, at best, I would put in a rectangle formation and say it could pull back somewhere to over there. So I suggest that you start being a little cautious about your biotechs. Fewer and fewer are moving. And in fact, what we're starting to get is we're getting, this is the part that makes it real nervous for anyone who's short individual biotechs, because you're getting takeover rumors. And that usually that occurs either almost at the top or after a top is made and they're already they're in the doldrums. Suddenly the big companies start looking around and say, hey, good deal, so and so's gone down from 80 to 25, now it's the time to look at it as a takeover. So this is a very dangerous period. In a sense, it's also a dangerous period for the shorts because of the that takeover factor. But I think it's just getting fewer and fewer that are leading, and they are becoming more and more likely to at least consolidate on a monthly basis. So that'll use time and price. Okay, now let's go back to, we're looking at gold, and I want you to now just go back to copper. Copper is another weak session today. Yesterday we were talking about, and also when I interviewed Andy Hecht, who has a terrific show talking about commodities, Tuesday and Thursday, as well as his newsletter. We were talking about it, and he has a target lower down for the high-grade copper. I have a target lower down based on my Chapman wave methodology, but most importantly, I look at it as an economic barometer, and it's really telling us that internationally, the industrial use of copper is waning, or there's just a glut, or there's a combination. So you put it together, and it says copper could very well break under the 265 support, and then all of a sudden the whole 260 to 255 area becomes a target. Well, let's see what happens. It needs very much to break to 272 to 275 over the next 2-3 weeks rather than breaking down. Well, if we put that together with the FXI, and FXI being the iShares FTSE China 25 ETF. Remember, we've been looking at this for quite some time. And what I drawn in, the last peak was at a peak F top back in 2007 at 72.26. It pulls back, a little bit. It goes down to 19.35 back in October of 2008. 19.35. And that was 10.08. And all of a sudden, what we're looking at is it goes within an up channel, makes a bowl formation, and breaks out very strong leg E, but it bumps into that inside track resistance area. And that's where it is. It's trying to test that resistance area right now. The weekly chart is still very strong at 90% in the stochastic. Right there's the stochastic, one of the technical tools I use. On balance volume has just turned down, but it's still quite strong. And the MACD has been expanding, and that is a positive, at least for now. And what you've got is either a recycle leg or peak C coming up, or it's a G/C. And so far, there's nothing to do other than to say on an intermediate term, it's still looking very strong. On a shorter term, I have other readings. I have a reading that says that if this is peak F, which it absolutely looks like, at 52.56 back on the 16th of April at 52.56, if there's a break in the next week below this candle of the 17th, the next day, that big sharp gap down of 49.47, let's call it 49. If the 49 support goes, then we've made a peak F top in the daily, and that'll start to impact the weekly. But the weekly still says, hey, I've got tremendous support in the 48 to 47 area looking out, and that's the way it is right now. So I wanted to just show it in the context. Let me show you something here. DOW. This is the German. This is the Dow Jones German stock proxy. I call it a proxy. It isn't the index itself, but it's made up exactly the same. The chart pattern looks the same. There's a right shoulder extension to a peak F, or almost like a rogue wave that goes to a peak F and then fails. And before you know it, it's back down in the sell mode, which it was before. It suddenly spiked up. And that says that if I give you numbers, it doesn't really make sense. I'll give you the dates. It says that there must be a decisive close above the high of yesterday on the 21st to be able to reestablish the uptrend. Why? Because a break below the low of the 20th would be very negative. If it closed under that, that would not only be a close under the 9-period moving average in the weekly chart, but it's a leg D with a potential peak D being made in the weekly, and that will impact the candle that we're looking at right here of the monthly. But the monthly technicals are still very good. Actually, the weekly is still very good as well, but it does say be careful because there could be a pullback here that really starts to digest in time and price if it does come about. And the other thing I want to do is GBDOW, and that is the Dow Jones UK Stock Index. Now, what's fascinating about the April period is that it's an exact time match between the highs of 2007, the low of 2009, and then the high of May, I think it was, May of 2011. If you start off with that May high, go to the low that was made in August of 2011 to where we are, you've got an exact time to the month, a parallel count in time that says April will be as important as the peak E-top was back in May of 2011. So we're going to be watching that real closely. But back at the ranch, all that's saying is it made a peak D in the daily. It's making an H-type pattern in the daily, and that says that a low, once again, the price is different, but the pattern's the same. A low below, going below the 17th of April, a close below that starts to fill in the gap. Going into that very strong candle of the 7th of April, it needs very much to break above yesterday's high to say, hey, I want to retest the highs. But this is a leg D with a potential peak D in the weekly chart. Okay, now I want to do a couple of things. I wanted to show you that there are stocks. We don't own them. We tried to. It didn't quite work out. FEYE is FireEye, had a really nice bounce. Now I'm watching it closely. Is the move to a potential leg D in the weekly above 46, that the high that was made a couple of months ago, is it going to unfold now or after further correcting? That's a big question. We'll know by the end of the day a lot more. You've got stock like Amazon, which suddenly broke to the upside in a leg E with a very long doji candle. Oh, this is a whole bunch of implications. You know, Steve is an expert on candle formations, 39460. I have just a few candles that I use, and they are really important in my work. And what it says is the long-legged doji that was made yesterday implies that if there is a close either above the high of 394.60 or below the low of 386.80, two things should happen. If there's a close above, it says that the very next bar should be even higher, but then watch out because it could pull back, and it would want to touch the eye right there, the open and close at 391.31. to 391.18. It'll have to tag that before it gives you a directional clue again. And if it closes below 386.80, it means that it wants to go lower one more time. Then it's going to have a bounce trying to get towards that 390, what did I say, 91 area, and then it should continue lower. So that's the implication for me with that long-legged doji. But it is leg C in the weekly chart. And leg C says, hey, there's a good chance with the MACD holding at 88%, the MACD holding while making an M formation and the stochastic at 88%, that we could try over the next 2 weeks. It'll take 2 weeks into May to make a leg D, if in fact all of next week does not make a new recovery high. And the cup formation says that 408.06 level with a 398 round number open in the month of January, was it? Yep, January of this year. No, of last year, I'm sorry. That, besides becoming a tagging focal point, a close above 398 would suggest that it's going to make a new recovery, all-time high. Failing that 398 round number high, even touching it, even just getting close to it, would be a big negative and suggest it's going down to the 354 9-period exponential moving average over a period of months. So far, Amazon is acting very, very well. Okay, now I wanted to do that. Then I wanted to have a quick look at crude oil, which we haven't looked at for a couple of days. Crude oil has made a leg a peak C in a retracement mode. That means it doesn't have to go to a D because it's retracing normally. But because it's taken out all those highs that were made back on the 3rd of February into all of February from the low of the 29th of January at 47.65, the implication here is that we should be looking at some kind of rally above the 9-period moving average, having one quick move to a D. Why? Because it overcame that and closed above that resistance area a couple of times. No, let me just double check that. So that's the crude oil continuous contract at 58.31, 58.22, 58.82 with a close at 58.11. Close at 57.88. Oh, it has not closed above. So let me draw this in as a nice thick gray resistance line right there. That's a resistance area. And if you look at it, look how patterns unfold before your very eyes. I'm going to tell a quick story here. A long time ago in the early 70s, my wife and I were in London. And we were walking around, and I had my long British what was it? It was a long, what do they call those dark blue jackets with the buttons they're double-breasted buttons. It was like a military jacket. Anyway, I'm walking along and I had a beret, a French beret. I looked very European, although I was, of course, not a European. And then I'm in the store and there is beautiful posters, and I'm looking at the posters. I'm looking at one in particular, and I'm looking and it's all in black and white. And I say, wow, that's an interesting design. And as I'm looking at it, this young girl turns to her friend and she says, oh my God, that's John Lennon. And as she said that, whew, the picture of John Lennon unfolded. And after that, I couldn't look at the picture again without seeing John Lennon. But before, I was just looking at the dots. It was made up of dots. And that's the way it is in chart formation. Look, all of a sudden, you see this bowl cup formation in crude oil? That's suggesting we could, in fact, go a little higher. Even though the monthly chart and the weekly chart look very poor. Isn't that interesting? I'll be back with Talk Chart Patterns. Now the Dow's down up 50 and the S&P's up 5. I'll be right back after these messages.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Folks, we're back. Basil Chapman sitting in for Steve Rhodes, and we're looking at a cup formation. It's more like a bowl formation with a Chapman Wave inside wedge target line. That says that crude oil could, by late next week, by the 30th to the 1st of May, could in fact hit the, interesting. Yeah, it could hit the target right there, and that's 59.66 level, and it's a 56.90. Ooh, that'll be quite a move to the upside. Well, let me put it this way: it should go about 58.82, and that'll start leg D. Now that's going to break down. That will not occur if, in fact, you break under. It's a 56.11, 56.90 right now, 55.90, 56.11. Then 55.19 and then 54.30 are the three key support levels on the different time frames that I'm looking at right here. So let's see what happens with the crude oil. And the monthly chart is still very poor, and the weekly chart says this is just another H pattern. Lowercase h goes to a lowercase m pattern. Okay, so we've got just a few minutes before my show, my usual show. So let me do two things. One is, let me just mention once again, Steve Rhodes has 2 webinars coming up. Go to the front page. It's going to be Thursday, May the 7th, and Thursday, May the 14th at 6:30 p.m. It's on the psychology. It's your inner self. It's how to find the calmness and the use your methodology to be able to enjoy your trades. That's really, I think, what Steve has been talking about, and he does that really well. So I recommend that you check that out. Also, I have 2 webinars coming up. The first one is this coming Tuesday night. It's really a review, Chapman Wave, the essentials of the Chapman Wave methodology, and how to read my charts for my newsletter, and I'll go through the different characteristics that we look for and the time frames, how you can use one time frame to help you hold a position longer than normal That's going to be very important. And the other will be the webinar a week later on the match between now and the late 1920s, how so many things are just paralleling. Does the outcome have to be the same? Well, we've had so many areas of reparation. You've got Social Security. You've got the banks have been strengthened. Just so many things have happened that weren't there before. And you know, everything that I read tells me that there was just a couple of percentage of the people of the United States that were in the market at that point, 3%, something very small. I don't believe that number, but that's the number that I have to believe because that's what was printed. And even now, there's not a huge number of, there's way more people now that are involved in the market, but less than you would actually be thinking. I believe a lot of people went into real estate over the last 3 to 4 years, 4 to 5 years maybe. And as a result, that money is being siphoned between different areas of the real estate market and the stock market. So one of the reasons why as in 2000, January of 2000, the Dow did not continue rallying and going into the 917 and 19,000 level that it did, that it should have, that I believe it should have, because all the money went into the NASDAQ, AOLs and everything in the NASDAQ, and the high-tech stocks, and that just usurped all the money. But it didn't do that. The Dow didn't, and I believe that we will still see something to do with the Dow-type stocks that is really forceful on the upside at some point. And we're just in a corrective period right now, and we've got to face that. All right, so we're about to wrap up, and I haven't talked once about the volatility index. I'm going to take a little more time during my show to do that. But in the meantime, the volatility index spiked up, and now it's way back down to 13.06. I'll spend a little more time in my show, the Tide Technicians Hour, coming up right after this break. Stay tuned. Otherwise, have a great day, and we will see you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.